Good afternoon, everybody. My name is Art van den Enden. I am the Garden Center sector rep for the sector group of Landscape Ontario. I want to welcome everybody to our first March Town Hall of 2024. A reminder to everybody that we've got two more town halls that are going to be not next week, but the two Tuesdays or the two following Tuesdays after that in the month of March. So welcome. I'm excited that you're all here. Today, we have a very special guest, a gentleman that I've known for a number of years, Tom Shea. So I'm going to just quickly go through Tom's bio, and then I'm going to let him grab the mic and share his wisdom. So Tom Shea is a savvy fourth generation retailer whose expertise helped businesses. His family business was a general store started in 1924. Tom began work at the bottom, learning lessons in management and ownership from the older generations. They filled Tom with knowledge and situations to help him understand the intricacies of financial understanding, the strategy of the business, deciding the products and services to be offered, unique and non-traditional ways of marketing a business, and importantly, how to develop and build a great team of employees and co-workers. Tom is a prolific writer as well as speaker. He loves presenting to share his knowledge, both in live and in virtual formats like today. Tom has earned the Certified Speaking Professional distinction. This is something that's only been attained by 8% of public speakers. So Tom's presentations are interesting, filled with stories that share great learning experiences. I can attest to that from the several that I've enjoyed over the years. He also provides his audience with ideas that are quickly actionable when audience members return to growing their business and profit. Tom offers the best takeaways, proven results. So Tom, welcome, and we're thrilled to have you.
Good morning, Art. Thanks for inviting me. Good to see everybody. Looking at the participants list. Hello, Perry. How are you, my friend? Gosh, it's good to have you in this session. I was hoping you were going to be with us today. We're going to talk about my favorite topic, making money, how to make our business to make more money for us. But I'm going to do so by asking you to look at your business in a very different manner. And that is, I want you to think about your business as though your business is simply an investment, okay? You have an investment in your business. The question anyone should be asking themselves is it the best investment that you could possibly make with your money? Or should you go out and buy Apple stock or whatever this new AI stock is that all of a sudden is going crazy? Where should your money as an individual, where should your investment be? And of course, as I prepared for this, I'm going to make a very strong argument that says your business is where the money ought to be. However, in looking at our business, I think if we look at business differently, that you would find that we can make a whole lot more money by making some small changes to it. So as an example, growing up in our family business, I remember hearing there was this old adage that said there are ways that you take and you can make more money. All right. The hardest one, increase sales. Sounds easy, but of course we all know it's not that easy just to all of a sudden increase sales in our business. Number two is increasing margins. And in looking at increasing margins, I want to make a comment right now with regard to what we've experienced in the last couple of years, and that is increased expenses. We have experienced a lot of increased expenses in our business. Every time you write an order for something, it seems like whatever it is, it's gone up. Think about in your business, simply increasing the margins. I think we've all become somewhat numb to experience an increased price. Just the idea, if you could squeeze 1 or 2 points of extra margin on what you're selling. The second one, or rather I'd say the third one, is learning how to decrease the expenses. All right, so what we got? Three ways. Can I increase my sales? Can I increase my margin? Can I decrease my expenses? Any one of the threes, combination of the three, mathematically, business is going to make more money. But I'm going to show you a fourth one today. One that makes a lot of sense and makes a whole lot more money a whole lot quicker than what we've talked about so far. So I want you to look at your balance sheet. Your balance sheet has got assets and liabilities. Top the assets, that's what you got. Liabilities, that's the bottom part. That's what you owe to people. And then beneath that is the important part, which is you, contributed capital, current income, retained earnings. And that's stated in a situation where a person is a corporation, not a private ownership. In a private ownership, you would just call yourself net worth or equity, something to that effect. But when you have these liabilities in your business, whatever they would be, mortgage for your property, for buildings, loans, whether it came from an institution, whether it came from an individual, that you've used that money to take and build your business over the years. And by the way, there is absolutely nothing wrong with a business borrowing money. I find too many people in our industry listen to a gentleman, very knowledgeable. His name is Dave Ramsey, and he's telling you that you shouldn't owe money to anybody anywhere. And I think he's got some little cute saying about a paid off mortgage is the new BMW of life or something to that effect. Okay, that's true on an individual basis. But in a business, when we look at what kind of return you can make on your money in a business and what you're going to pay for money borrowing from somebody or from an institution, it's like, this is the interest rate and this is the return rate up here. Okay, it makes sense where necessary to borrow money. So please don't confuse running a business with being an individual and thinking that having zero money owed to anybody is the ultimate goal. When you borrow money, the lender is looking at it. We should also look at it from the standpoint of like, well, how much money do I have to make so that I can take and repay the loans that I have out there? And that comes into doing something with something like a budget. Okay. So we've looked at that interest rate. That is what I'm paying. But the direction I want to go today is looking at the interest rate that your business should be paying you. And I dare say I find most people have never calculated to know what is the interest rate their business is earning for them. Well, today we're going to go down that street. We're going to look at it. I'm going to show you how to do it for your business. And I want you to learn how to calculate this. We call it ROI, return on investment, that your business is earning for you right now. And then for most of us, if you own your building and land, yeah, that could be the biggest asset you got. But if I'm renting my property, if I'm renting my land, my building from somebody, then inventory is going to take and be the biggest investment I've got. And unless you're in an area where property values are going up greatly, then inventory is the one that we can do something about. If you're in an area where prices of land and buildings have slowed down from what we've experienced in the last couple of years, then there's really not a whole lot you can do about it. And plus, also, if you sold the building and land, then now we're out of business. That's not good either. All right, so what we want to look at is that the inventory in your business is going to be the key factor for this fourth methodology that I'm going to show you in making money. Okay, so Carrie, if you would please, would you put up that first link, the one that's return on investment? Would you share that with everyone for me, please, ma'am? This is the calculator from our website, profitsplus.org. And when you visit our website, there is nothing for sale up there. You don't sign in. We don't have the little box at the bottom that says, click here for cookies or any of that stuff. It's just there because it's important stuff to show you how to make more money. This is what the calculator is going to look like before we've done anything to it. And what we're going to do today is we're going to talk about the yellow boxes, what we put into them, and then we're going to look at what you see, those dark zeros, and what do those tell us about your business. All right, so here's the numbers that I need And by the way, when you visit the website and you use the calculator, when you leave the page, all the numbers disappear. We don't use Google Analytics, so I have no idea as to who's visited the page or what the numbers are. This is just a way that I have learned to look at a business, and my purpose today is to share this look with you. I need to know total sales for your business. So we're only 60 days out of the year. Um, let's take 2023. I need the sales for the year. I need to know credit sales. Okay, now this is credit sales, not credit card sales, but what percentage of your business do you do with, say, perhaps landscapers, where they come in, they select stuff, and you send them a bill at the end of the month. If you do not have this, if your business is solely a cash and credit card business, then your answer here is 0, and that's fine. I need to know for the same year, what was your cost of goods sold? This is a dollar amount. I need to know what were your operating expenses, not individually, but as a whole. What were the operating expenses for last year? Your tax rate. This is not really that important. This is kind of put in here for my sense of humor, thinking that when you see what this is going to change in a business, there's a good chance that you're going to find that your tax bracket is going to increase, because you're definitely going to wind up, by making these changes in your business, you are going to make more money. I need to know average inventory on hand. Okay, now for average inventory on hand, you have 2 methods to do it. Number 1 is to take your balance sheet for every month in 2023, look on the line on the balance sheet up in the assets, it says inventory, add the 12 together and divide by 12. Some people will say, take those 12 and take January of this year. So now I've got 13, add 13 together and divide by 13. I'm fine with either one. Doesn't make a whole lot of difference. But I need to know average inventory on hand. Do not just pick year in or pick some month out of the year. It's average inventory on hand that we need to know. Okay, receivable. Well, now this goes back to the credit sales. If you do not do credit sales, then this answer is 0. And again, that would be fine. If you do have them, your average accounts receivable is calculated in the same way that the average inventory on hand is calculated. I need to know current assets. Okay, well, that's essentially what do you got sitting in cash? Or if somehow or another you've got money sitting in a savings account at a bank, okay, that counts too. Long-term assets. This is building. This is equipment. This is fixtures. This is your point of sale system, okay? This is not your inventory. This is all the other things out there. Current liabilities. Now, this is a little sidetrack we're going down here for a moment. Current liabilities, just to make sure that your accountant is doing things the way they're supposed to do, because I find a lot of them don't. A current liability, while that's the first half of the liability section, by definition, a current liability is any bill that you expect to pay in the next 12 months. So while you would look at your accounts payable, the other one that comes into play is if you are paying for a vehicle over a period of time, if you are paying a mortgage over a period of time, what counts as a current liability is the principal only part of the payment for the next 12 months, not principal and interest, not the total payment amount, but principal only for the next 12 months. And then all the other liabilities added up, that's your long-term liabilities. You got to punch that number in there. All right, so now that's how it works. Let's talk about a pretend business, okay? Numbers just made up. This is a garden center. They sell some gift items. They sell a lot of hard goods, definitely not just plants only. Total sales were $875,000. 12% of their sales were done with credit. Their cost of goods sold was $460,000. Your operating expenses for last year was $340,000. Their tax rate was 20%, and their average inventory on hand was an even $250,000. Please understand, this is an example. This is not a real business. These are just all made up numbers. Let's look at what we got. Like average accounts receivable, $19,500. Current assets, in this case, I said a checking account, $7,000. Long-term assets, $175,000. Current liabilities, $23,000, and long-term liabilities, $125,000. So as I'm trying to envision this business in my head, I'm saying, well, this probably has been a business they bought fairly recently. They paid off $50,000 of the long-term asset bill, the building, the land, whatever it was. Let's put the math to it. The gross margin for last year in this business was 47.43%. The operating expenses were 38.86%. The gross profit was 6.86. All right, for those of us who are not numbers inclined, let me explain how this works. You start with your revenue for a year, okay? Looking at the picture, it's like a pie. Take your choice, pumpkin, chocolate, whatever flavor you like. It's a whole pie. That's 100%. That's your sales. When we see gross margin and it says 47.43, what that's saying is 47.43 is what you have out of this pie to take and pay bills. 53%, that's the reverse of the 47, 53%, that is what paid to get all the inventory there. So now out of this 47, little less than half, 38%, about like this, that paid for the operating expenses, and the slice of pie left is 6.86. Okay, that's percentage of profit. Out of every $100 you sell, $6.86, that becomes the profit in the business. Inventory turnover, 1.84. That says over the course of a year, you have had your inventory, you've bought it, you've sold it, you've bought it again, and almost turned it over a second time. Inventory turnover is a key factor. It's key to that fourth way of making more money in your business that we're going to take a look at. Your accounts receivable days, 66.86. This is not good. This is just not a good number. It's too slow. So envision making a sale on March 1st to somebody. Okay, you already had the inventory on hand. You've probably already paid for it. You sell it on March 1st. You send the customer a bill on March 31st, and then they don't pay you for April or May until 6 days into June. Between March and June 6th, that's a long time of your money sitting someplace other than in your checking account. My understanding from lenders is they want to see that number down about 45 or less. The key is even when you put the note on their statements that you send to people that say, we charge 18% interest on unpaid bills, most people don't collect it. You're just glad when you get the money. You just have that statement on there trying to get someone to hurry up and pay a bill. Return on assets. All the assets that we've already looked at in your business, current and long-term assets are also called fixed assets. Your rate of return is 13.29%. Your financial leverage is $1.49. The best way I have explaining financial leverage is like this. Start with $100 and go to a casino. Play games, slot machines, whatever you want to do, and you're having a good night and you're winning. So you started with 100. And when you have gotten to the point you've got a nice chunk of money in front of you, you take $100 and put it in your pocket. So you came and you took $100 out, you put $100 back in your pocket, still have money there that you're playing the various casino games with. In casino terms, that's called you're playing on house money because you've already taken your $100 back. Financial leverage is somewhat similar. For every dollar you have in your business, you're using $1.49. So you've got 49 cents there out of every dollar that really belongs to somebody else. You're not paying interest on it. You're able to take and make money on it. Financial leverage is good. We want to drive financial leverage up. ROI, and there it is. ROI, 19.77%. Okay, so any of you who invest in the stock market, any of you who use a financial advisor, anything else that you might invest with, I want you to think about this for a moment. What's the ROI that produces for you? Is it 19.77%? If the answer is no, then right off the bat, before I've even made my example here, your business is the best place for you to invest money. 19.77 annual return on the investment that you have in your business. This is what it looks like on the calculator. Okay, there's all your numbers that we've inputted. The dark numbers, now those are the answers. And again, you look at the one in the bottom right-hand corner, 19.77%. That's the ROI. So if we were all here together in the room, I would ask you, are you happy with ROI? And with the explanation I gave you about how you invest in the stock market, most people would say yes. But let's start looking at these changes that we could possibly make. I'm going to stay with sales at 875. I'm not going to change the credit sales. What if you could buy a little better? What if, I mean, when we go to a trade show, okay, I know of a wholesaler that refuses to call their thing a trade show. They call it a market. And they say, we're not here to show you anything. We're here for you to buy stuff. And in my years of buying for our store, yes, I go to the market, the trade show, whatever you want to call it, with the intent of I'm here to write orders. I'm here to get the preseason best deals that I can get. So if I take advantage of that, just a minimal amount, $10,000 a year. Okay, that's all by buying something in bulk, by knowing this is what I expect to sell over the course of the year. Can I get a better deal? Do I get dating on the inventory? That's what I'm looking for. Operating expenses. Perhaps one of the simplest operating expenses to look at right now is lighting. From all the years where we had fluorescent bulbs and we had ballast, and today we can have the new bulbs that don't even use a ballast, which is what eats up most of the electricity. Operating expenses, looking at your insurance every couple of years, going back to different people and saying, would you look at my business? Would you give me a quote as to what I can get for insurance for my business? If you have a facility, looking at your heating and your cooling bills, what is that? What's my temperature set at? Little things like that. So in my example here, I'm saying, what if by paying attention, I could save $20,000 a year in expenses? I mean, this is minimal. This is not even a 10% savings of operating expenses, but it is the job of an owner to pay closer attention to a business and being able to take and control expenses and save them. Realize right there that just $20,000 in operating expenses, that would just throw $20,000 right down to the bottom line. The accounts receivable, tax rate still 20. Average inventory on hand, $250,000. Okay, so now understand when you look at all the numbers that I've changed, I haven't done anything fancy like changing a loan or doing some other wild and crazy thing. I'm just saying, as an owner, I should always look to find ways to buy better, and I should look at ways to continually control my operating expenses. My average accounts receivable is not changing. I'm not changing current assets. I'm not changing the building. I'm not changing my liabilities. None of this stuff. I'm not changing any of these items, just those two items. How do I buy and how do I control my operating expenses? So let's look at what changes in this business. My margin has now gone to 48.57. That's 1.14 that falls right to the bottom line. My operating expenses have dropped to 36.57 from 38. Okay, yeah, that's 2.25 points that I've saved right there. It shows right here, a business that was a so-so at 6.86 is now cooking along at 9.6% for a net profit. The inventory turnover has dropped, and I have no concern for it at this point. It's dropped to 1.8 from 1.84, but that's simply because of the mathematics of how I bought and that small amount of savings that I got. So that small fraction, no concern, none whatsoever. Accounts receivable, I'm not changing that. My return on assets, look at the jump there, 5% better. My leverage is not changed, but look at this, my friends. The ROI in this business has gone from 19.77 to 27. I'm expecting that most of you looked at the 19.77 and said you were thrilled and elated with it. But by paying a little attention to how you buy and a little bit of attention to taking how you control expenses, all of a sudden we've gone from 19 to 27. Okay, that's a pretty incredible change. So are you pleased? Okay. Wait before you say yes. Remember where it got you last time you said you're happy with it. This is what it looks like on the calculator. 27.68. Same business, just a little bit of detail to things that an owner and buyer should always be looking at. But here's where we're going to go down different track. The cost of goods sold, how I buy, operating expenses, we demonstrated right there. Both of them definitely made a difference. But if we look at that inventory turnover that was 1.84 and then went to 1.8, if we look at that, it's going to make a whole lot of difference. So I want you to think about walking around your garden center, and I want you to look particularly at hard goods that you held over from last season, and you're going to have them in your place as we start the new season. It's not just that it's old and it looks old, even if you take and clean it up and maybe put a new price tag on it, or even worse yet, if you take and put one of those red and yellow sale tags on it, okay, it's a distraction from your business. The other key thing is this inventory, which has sat dead in your business over the past months, is killing the ROI in your business. And the lesson I primarily want to teach today is what can we do today that's going to make that ROI really pop in your business? So here's where we left off. Okay, we're at 27.68% for an ROI in your business. Again, when you use this calculator, you punch in your yellow numbers. If you look in the chat box, you'll see that Carrie put up the link there. You click on that one, it'll take you right to that page on the website. When you see it initially, it's got all zeros in it. It's just ready for you to take and enter your numbers in the yellow squares. So I have to make an assumption here in the business. When I've done this in a live session, the answer is pretty much so a unanimous, this is right, at least this much. Matter of fact, the comment I get, I will say, so how many of you think that you have 15% of your inventory that is just not moving in your business? Show of hands, please. And hands go up, and there's usually a couple of comments that say, I wish it was only 15%. I want you to understand what that 15% is doing to you. In my sample business, that's $37,500 sitting there doing nothing. Any item that's sitting on the shelf as hard goods, and as the season rolls around, it can be the same for live goods, and it's sitting there. I want you to look at it not as a plant, not as hard goods, but to look at it as dollar bills. How much does that thing cost you? It's sitting there and it's doing absolutely nothing for you. That's hurting your business, and wait till you see how much it's hurting your business. So the key is sell it off. I'll be happy at cost. In some cases, I'll be happy at any dollars I get for it. But I need that space, and I need that money. So in our example here, we're going to sell it off at cost, and we're going to put the money in the checking account. I can remember exactly where I was as a child. My dad telling me what the great thing was about being a retailer. And he says, when you make a mistake, if you act quick enough, you sell it off, you get your money back, and you go do something else. You are forgiven for your mistakes as a buyer. So here's what happens. I took the $37,500 in dead inventory. I sold it for cost. Here's what changed. The $7,000 I had is now $44,500. Okay, simply because it became cash sitting in the checking account. Here's the second number I want you to notice. We were at a 1.8 inventory turn. Now we're at 2.12. What this is a more realistic look at your business. Your inventory is 2.12, but you're being drugged down by inventory that's sitting there and is selling at a rate of 0 turns per year. So the real number in this sample business is 2.12. Down in the lower right, you see where it says the same. We have done nothing to improve the business. Okay? I mean, we got cash in the checking account, but we've done nothing to improve our ROI. Why? Because dead inventory and money sitting in a checking account are the same thing. They're not doing anything at all for you. They're not making profit for you. So let me suggest this one as a different avenue. What if we took the $37,000 and bought additional inventory that is actually moving? And I'm going to make the system say it turns at 2.1 turns because that's what the rest of your business is doing. Now, when we do this, things are going to change. Things will be very different in your business. Here's what the screen looks like. I don't know where to start. Well, let's start at the top. Okay, your business was selling $875,000 a year at a 1.8 turn. But if I could take and have all that $250,000 in inventory, sell at 2.1 turn, it forces additional sales. This business is now doing $1,008,200. That's over $133,000 additional sales. My margin has not changed. Okay, here's the kicker, folks. Look at the next one down there. This business was producing $75,000 in net profit. It is now making $158,200. The profit is doubled. Again, this is from a mere $37,000 in inventory sitting there doing absolutely nothing in your business. And suddenly when it is moving, the $37,500 is turning like the rest of the business because now you're paying more attention to what you bought and making sure that you're not having dead inventory. Your sales cannot help but go up. Now, go down to the bottom right-hand corner. Look at that. Return on investment. Look at that number. Over 40%. We started at 19. What have we done? By paying attention to how we buy, paying attention to controlling inventory, controlling the expenses in the business, and watching for dead inventory and getting rid of it and turning it into inventory that turns at a decent rate, like the rest of our place does, we are doubling the profit. We are doubling the return on investment our money's got. I think when we started, if I could have seen your faces, that you would have been thrilled with the 19.77%. Now when it's north of 40, I mean, I hope you're jumping up and down going, oh my gosh, my business can make me this kind of money. Yes, it can. But what happens is we get to that inventory and it sits there and we think this is what should sell and we don't know why it's not selling, but we let it sit there waiting for that right person to come walking in the door. Now, stipulations. How do you make the $37,500 work right for you? You've got to put it into inventory that moves and turns. Can it be more than 2.12? Absolutely. What this does not mean, it does not mean take the inventory that you've already got on hand and buy more of it. The only way you would make sense to buy more of it is if you're running out of it. Yes, if you're running out of an item and you need cash, this is going to free up cash out of that $37,500. And you take that money and you put it into inventories that you have substantial inventory on hand. But don't buy a year's worth of stuff if you can get by with buying even a month's worth of stuff. Don't go for depth. Look for what else can you add to it that you could sell to people. This is where I'm sharing the idea. Try new things. Try adding things on it. I can remember speaking with a group I don't want to define them because who they are, because I have to pick on them. And I made a comment about saying, everything you have is live goods. Why don't you have any hard goods? I said, think about a person who moves from an apartment, moves into a house, and now they want to do some landscaping in their yard, and you go out and sell them plants. But you're not selling them fertilizers, and you're not selling them a shovel, and you're not selling them a garden hose, and you're not selling them nozzles. And I go, why aren't you doing this? And they said, well, because we can't sell it as cheap as the mass merchant can sell it. Okay. I can't sell it for what Canadian Tire can sell it for. And I go, look, we can't compete in that game. I understand that you sell a higher quality plant, but who's going to understand that the plants you have are higher quality if they don't come back, because you're forcing them to go to Canadian Tire to buy the shovels, rakes, the hose, the garden hose, the nozzles, the fertilizers, the mulches, and all that kind of stuff. It doesn't make sense to be missing sales. It could be the same thing for adding gifts to what we sell. It could be the same thing for saying we're going to sell fall related merchandise. We're going to have Halloween merchandise. We're going to take and convert our building to inside that. We're going to sell Christmas merchandise, whatever it is, and go, well, what if it doesn't sell? Then that's where you turn right around, you sell it off at cost, and you try something else. But you continually experiment with where you put the $37,500. But what we have conclusively proven here is that $37,500 sitting doing nothing in inventory or sitting in a checking account is doing nothing for your business. We laugh at the old story about the person who took and put money under their mattress. We laugh at the old story about the person who took an old coffee can and buried the money in their backyard. That money sitting on the shelf, sitting out in our plant selection and doing absolutely nothing is the same thing as the coffee can. It's the same thing as the money under the mattress. It does nothing. It's not like wine that it improves with age. So the little caveat that I threw in there dealt with the idea about buying the inventory and do I buy it deeper? So we go to trade shows, we see vendors, we do pre-booking of merchandise. How should I buy merchandise? Do I buy it as I need it, or do I buy it in quantity? Okay, at that point, Carrie, if you would please, ma'am, would you toss up the link for the other calculator for us so I could share that one? Thank you very much. Here's the other calculator. This one says, I'm buying products as I need it. And it says, no, what I'm doing the other way is I'm buying them in something different, like a drop ship from the manufacturer, or buying a quantity of the product at the show. Which way is better? I can't show you this whole calculator because it's too long, but this takes the information that you put in, or you can press the test button and it will give an example to look at. And it says, where do I make more money? Buying it as I need it, or buying as a deal? Well, see, some of the things that you have to tell us, what's the difference, as the difference in the cost, the difference in how long you get to pay for the item, you get to take and look at, is freight a consideration? All of the things that are considered. And the last one is, you have to, I guess, ask a banker, if I were to borrow money, what is the cost of the money that you're going to charge me? Okay, fill in this. You see, there's a few blanks I'm asking you to fill in. Then when it gets down to the teal colored section, it's going to give you an example. And again, it's going to run it for 8 months and say, here's what the actual cost of the inventory is going to be in method 1. Here's the cost in method 2. You just got to look at the two of them, make a comparison. Which way do I buy this thing? And it will give you a hint, a strong hint, as to how you should be buying it. Okay, so that, my friends, is the best things I've got for you tool-wise. So instead of making a guess, or everybody knows, and this is the rule of thumb in business, this is how you make a good decision in your business, by using facts out of your business and using these free online calculators. So here's a couple of closing comments before we go for questions. Number 1, do not take a part of your garden center and make it into a closeout corner where old items go to die. In our business, we used to have a joke. about people who went for closeout corners, because at one point we had one. And I walk into businesses, I walk into chain stores, and I see them with closeout corners. They don't make sense. So looking at my little friend there in the bottom right-hand corner, the question was asked like this: what's the difference in a price shopper and a catfish? Okay, what's the difference in a price shopper and a catfish? And our answer was this: one of them is bottom feeding pond scum, and the other one, it's a catfish. I don't want to attract these people. I don't want those people to come to me because, oh, I'm having a sale. I want you to come because I got quality plant material and I got a great selection of gift and all the accessories to make a beautiful yard and house plants and all the stuff together. Number 2 on my list, don't have a true closeout sale. You call your vendors. You ask vendors and tell them, I'm going to have a sale event. What have you got that you can offer me some deals on? And you get products from them and you are extending margins on them. Some of the items that I would purchase from vendors for my closeout sale were items that I had gone through fairly decent. I didn't put them in the closeout sale. I put them on the shelf. Now I just have a bigger margin than normal. Couple of ways to get rid of items. Taking an item and bundle it in packages with full margin items. Okay? Full margin items there, and say, when you buy this, you get one of these for $5. It's a way to move items. Can you get your cost out? Yes, very frequently you're going to get the cost out of them. Number 2, we used to purchase Avery dots, you know, the little round dots that you bought at the office supply store. And we would take items and group them together and put red stickers, blue stickers, green stickers, yellow stickers. They're all symbolic. And it went like this. We would say, if you come into our place and if you spend $100, you can go over and buy any item with a red dot for $5. If you spend $140 with me, you can buy 2 items with red dots, or you can buy one with a yellow dot. If you spend $200 with me, now you can buy 4 items with red dots, or you can buy 2 with yellow dots, or you can buy an item with a green dot. See the essence of it? I am increasing the amount of what you're buying at non-sale items and allowing you to buy my closeout items at a special price. We put them on a table. They look nice. It gets people's attention, and stuff went away. Rules of buying. Never fall in love with inventory. Never fall in love. It's stuff, folks. It's a hard thing to believe, but it's just stuff. Number 2, you never buy inventory because you like it. I see too many times at trade shows, people go and go, oh, I like this. Do you like this? Oh, yeah, I like that. It doesn't matter what you like. It's what the customer will pay your price for. It's not about us as a buyer. It's about the customer. I had plenty of things that I sold. I don't like them. All right. I would never put that plant in my yard, but I sell it because people ask for it. Never let inventory have a birthday with you. It doesn't need to be there. It should come, it should go. As we get to start the season here, you have stuff there, and if you go 6 weeks down the line and you haven't sold the first one of them, as long as the weather is decent, and we're talking live material here, it's sat there for a period of time. Sell it off. Don't sit there and go, well, let's see what happens when we get to the end of May, the 1st of June. Get rid of it. It's not going anywhere. Let's go find something else. My closing point, so that we can get to questions and discuss items. It's very simple. A wise person, a wise buyer, a wise owner in the garden center industry makes the opportunities, more opportunities than they're going to find knocking on their door. It's knowing how to take and do what we've talked about today. It's about knowing how to buy to extend margins. It's knowing about how to control operating expenses. And it's knowing how to get rid of merchandise that's not moving, not going anywhere, and getting that money back and putting it into action where it needs to be with something else you can sell. Perhaps the one question I can think of ahead of time, someone's going to ask, well, how much money should I keep on hand? And I can't answer that question. Every person's business is different. So I don't know, what the number is that you always need to keep on hand. This is not to say in any way that you take all the money and don't have anything in your checking account and have it all in inventory. You have to have a comfort level. You have to have a cushion of cash on hand. But let's make sure we do it reasonably. With that, Art, I'm going to hand it back to you. Contact information. Anybody has questions, you call me, you write me. Be glad to talk to you. Be glad to explain any of these concepts here with you. But Art, let's open it up and see what we got from people.
Great. Can you hear me, Tom?
I sure can.
Awesome. Okay, so I don't actually see any questions. Oh, question time, Carrie. Are you handling questions, Carrie?
Okay, here's one. Okay, Katie. All right, Katie, you're missing the point of purchasing in bulk or as needed. Okay, so Katie, in my business, I was used to wholesalers and manufacturers who came to me in the fall, and you're selling me the products that I'm going to sell in the spring. All right, I give an example, Scotts. Okay, this is back in the days when Scotts would sell to garden centers and wasn't selling to everybody and their brother across the globe. They would come into our place and we would pre-book what I needed. So the two biggest items I sold out of Scotts was Turf Builder and Bonus S, because we had a southern grass that was a St. Augustine, and Bonus S has atrazine, which is a really great weed killer on St. Augustine lawns. Well, during the season, when I get to spring, there's a price I'm going to pay per bag, and I'm going to be buying it, say, a pallet at a time. But when I'm in the fall, I'm going to pay a much lower price, but I'm going to be buying 10, 15, 20 pallets of this stuff. I have full expectation I'm going to sell it during it. What that calculator does is saying, well, where do I make more money? Because if I buy 20 pallets in the fall, I have to think, when is it going to arrive and when do I have to pay for it? Ideally, I really don't care as long as I got space. I don't care when it shows up as long as it comes in before the season. But what does matter is when I have to pay the invoice, and if I'm paying any of that invoice before the season hits, now that's my money sitting dead on the shelf, but I know it's going to sell, say, a month later on. You have to do that calculation. Well, which way makes me more money? Instead of just saying, I don't know, but I'll buy in bulk because my friends buy in bulk, that's why I created the calculator. And it works for all kinds of things. I mean, it works for the fertilizers, it works for the chemicals, okay? It works for the mulches, the potting soils, it works for all the hard goods in the business. How do I want to buy it? But it also works, say, in springtime, where I'm trying to decide, do I want to buy 5 cases of this and get a cheaper price, or do I want to buy 1 case at a time? Okay, that calculator will do that math for you. Message me back and let me know if that explanation helps you.
Thank you, Tom.
I
So
think you got it. Good, Katie. Glad.
yeah, I have a question for you. With regards to your operating expenses, and when I was looking through your slides, I'm building in that your labor is actually in that bucket. How much more do you think a typical business can sell without increasing their labor spend? And I know that's a very broad question, but how much room do you typically see in there in our industry?
Well, so it depends on 2 items, but let me address the key behind the item. Okay. And it's something that we did, and you've probably been in class, Art, somewhere where I taught this. We did something very different than everybody else in the industry. In our business, I mean, our place was open 8 a.m. to 8 p.m., shorter hours we weren't open on Saturday night, and we were only open for like 5 or 6 hours on a Sunday. Okay. We were right in the middle of all kinds of big competition, and I couldn't do the 8 to 5 stuff. I would have died if that's the only hours that I had. Plus, I mean, plus also, let's look at it. If your business is open 8 to 5, Monday through Saturday, majority of your week, who's your customer? You know, they're unemployed, or they're retired, or they work in a facility and work second or third shift, because the bulk of the people who work 8 to 5 are at work Monday through Friday when you're open. Doesn't make sense. So we changed one differently, but every other Thursday night at 8:15 p.m., every employee was paid and required to come to school. And we talked about things. We talked about what we were selling. We talked about how to sell. You know, we talked about things in art in a manner to take and diminish having so many people in the business. My contention was, it does make sense that I'm one person and you're the customer and I'm waiting on you. A good salesperson can wait on multiple people, because you as my customer don't want me standing over your shoulder. We had a rule that when you came in, we had to walk you to the merchandise. We did not, no one was allowed to go, it's over there on that section, or it's back over there by that. We had to walk you to it, show it to you, offer to answer questions, excuse ourselves, go take care of somebody else, but come back and check them. So I had the expectation and the positive results that my staff was waiting on 2, 3, and 4 people at a time. What I have seen as a result of the pandemic was that when business went crazy like it did, because people couldn't go to work, so they're at home, and you know they're not working a full 40-hour week. Come on, we know that didn't happen. And they're out working in the yard, and they could come to our places, buy stuff, and work in the yard. When sales went crazy for us, we all had a bad habit of just, well, I got to hire somebody else. I got to hire someone else. We really didn't take and keep it in proportion as far as sales to staffing. To the example, I'll make this point. Carrie, if you can look on my website for another calculator for me, and find the link. It's called Multi-Year Analysis. And if you can find that and slap that one up there, that art is a great teaching tool for staffing. What it does, it says, give me your last 4 years of your profit and loss statement. Put it up there, side by side. And what it wants to look at is everything as percentages, but not as dollar amount in numbers.
Right.
Okay. So what it does is say, well, what was your gross margin over each of the last 4 years? As a percentage of revenue, what was all of your payroll? And that's probably the one I see went the worst, is that as a percentage of revenue, it was, you know, it just went up. I'm going to take and type right quick. I think I can guess the. Keep asking, I'm good.
Okay, so the next question I was going to have for you was maybe to ask you to revisit the strategies to get rid of, let's say, your 15% of dead inventory, without looking like a clearance house, and without, you know,
Yeah.
I know you talked about your, you know, the bundling, and that sounds like really a good strategy, but what are other things that independent garden centers can do once they've identified their dead inventory to move it out without negatively impacting their brand?
If you got a mailing list, you know, if you got some kind of database, a mailing list of customers, send them a note. You know, I could take and be something a little more discreet. I could find a way to take on a price tag, and take like a magic marker and put a little purple stripe on it or something like that. And I could say to my customers, this stuff is going to go on a clearance sale next week. So if you come in this weekend, you look for anything that's got this little purple mark on it, and we got a special price for you. But we're only telling it to you, our regular customers. Okay, Perry throws in scavenger hunt. The key is, as Perry said, you do something that's fun. You do something as compared to plopping stuff on a table and start marketing. I mean, I see people art that do things like they have a price tag on it. They scratch through it and put a number on it. They scratch through it again, a number on it. I mean, then it's almost like they got to have 2 or 3 price tags because they just like continued on next price sticker.
Yeah.
You know, all you're doing is tell me, boy, this is really old and you're really desperate of getting rid of it. I mean, one of the keys for us was always, if I had an item, I make sure it's neat, it's clean. Uh, we even had, I don't know how this worked, but we had items that we simply took them off, hid them for a while, put a new price sticker on it, marked them up, and brought them back out, and they sold. And sometimes it's just the location. Move it to, move it 5 feet away from where it was.
Yeah. Yeah. Yeah.
You
That's
know,
great. No, I appreciate that. And from my experience, absolutely living by that rule that no inventory should ever have a birthday, dry goods or live goods, is really important. So, the importance of watching your inventory and knowing how long it's been there is really critical. So,
but that's, I mean, I tell you, another side industry that, as far as, where could you put the money? Um, we had customers who walked in our store carrying these, what looked like plastic gas cans that were yellow. Okay. I can do kilometers better than I can do kilometers to miles better than I can do gallons. Okay. But so I got to stay with our term. It was a 2.5 gallon jug. And people would walk in and say, I want these filled. Well, we went for a period of time where we were like, I don't know what this is that you got. It was sodium hypochlorite, bleach, just like you go to the grocery store, it's bleach. Okay, with people with swimming pools,
yeah,
they use a lot of that. And it took us a while because we had to go through federal licensing, but we added bleach to what we sold. And then we started adding pool chemicals because what our customers were looking at differently than we were is like, I buy stuff from you that goes out in my yard. Okay. All the stuff that we go, I mean, other than house plants, I buy stuff that goes in my yard. My pool is in my yard. It makes sense to my customers that, well, you ought to have stuff from my pool because you got stuff for that. I never thought of it. But to tell you what happened with it, you get this tank that you put in the back of your garden center. It's got to be kind of away from people so people don't play with it. This thing holds 750 gallons of bleach. It's a big tank.
yeah,
Twice a week, they came and filled it. Okay, that's 1,500 gallons. Most people walked into the place carrying 2 of these jugs. That's 5 gallons. Do the math. I'm selling 1,500 gallons, 5 gallons at a time. That's 300 sales a week. And you don't come in twice a week. Okay, that's 300 different people. You came in and looked at everything else I sold. That was a tremendous draw. And then, of course, I found out that you don't make a lot of money on bleach. So we started adding all the other pool chemicals. Well, what else could I add? The key art in doing this is if you focus on not what we do, because so many of us, we went to school, we got a degree in horticulture, therefore I have to sell plants. No, no, no. It's not what we sell, it's who we sell to is the focus. That's where we should focus. Who that person is and all the various items and services that they might use. That's where the extra money goes.
that's wonderful. So Tom, on behalf of Landscape Ontario and the Garden Center Sector Group, I want to say thank you for your generous sharing of your wisdom. This has been very enlightening and fascinating, and really, your insights have been um, very much appreciated. So, on behalf of the audience, I would absolutely like to say thank you very much.
Well, thank you for inviting me. It's we're all in this industry for a long time. There's a bunch of you that I've known you for years. You're good friends. Uh, we all share. We make our industry better because we all can share with each other. And I appreciate you asking me to come and share today.
That's great. Well, again, thank you, Tom. And thank you to everybody in the audience. Much appreciated. Hope to see you again in 2 weeks' time on our next town halls. And also just a little mention to the audience that towards the end of this week, we are going to be posting our registration forms for 14 new training modules that we're going to be launching in early April for new garden center employees to kind of do a virtual town hall version of what Tom committed to with his employees. So getting a strong foundation of knowledge. So thanks, everybody. And again, thank you very much, Tom.
Thank you all. Enjoyed it. Look forward to another one with you.
Yeah, thank you. Thanks, everybody.
That was fun, Art.
Yeah, that was really fun. And you know, understanding the numbers is so important about running a successful business.
It
So
is. Well, there's two reasons why well, no, maybe three, why I do this. For one, it just makes sense to have fact to it.
yeah,
Second one is I remember a phone call not too long ago from a person had gone to someone's session and it dealt with getting rid of old inventory. And this person gave them a across the board, here's how you do it. And when the person got back, looked and says, if I follow their directions, I'm losing like a lot of money on this deal. And I go, there are no rules of thumb that applies to absolutely everything that we do. It's just like pricing. I mean, there's a study just in pricing by itself.
yeah,
And the third one is you've been around like I have over all these years. There are so many people, and it's getting to be more and more, who out there are selling this stuff. When I started building these calculators, I will, a bit of humor and a bit of truth say, I did it out of spite.
yeah,
You're out there selling this to people? Come on, just tell them how to do it. You don't need to sit there and say, I can tell you more. Just tell them how to do it. Don't make them hire you to do stuff. Come on. That's not fair.
yep,
So my first one was the one on how to do inventory control, how to do an open to buy. And it was the guy, and he was selling, you'd go to his class, and at the end, it was back when it was on floppy disk, it was $1,000 to buy it. And I go, I sat here and listened for an hour how to do it, and then you tell me at the end, now to actually make it work, you got to spend $1,000 with you. I think that's wrong.
yeah,
I went home and go, I'm going to build an Excel version of what our open to buy was, and I put it up on the website and go, here it is, free, help yourself.
yeah. That's true. That's one sector of this business that outside of being a garden center manager, I never dipped my toes into being a buyer. Like it is to be a good buyer is got to be one of the toughest jobs.
I have a class. I'm trying to think. I just talked to someone yesterday, and I'm struggling to remember who it was. I wrote a class, and I said, "What do most people do in buying?" They look and go, "That item, how many?" And
Yeah,
when I know the cost, I have a multiplier factor. If it's live goods, I multiply cost times this, and if it's hard goods, okay, then I multiply cost times that. And I
yeah,
go, no, there's a lot more factors. It's part science, it's part art. And this one session, that's all I'm doing. Say, okay, did you think about this? Did you think about this? And I think it's 8. I have 8 different points.
yeah,
I understand the original 3, but there's 8 different points that I ought to look at. Example, in running a garden center, you put something out and you have a display and it sits there and goes nowhere. You give it a couple of weeks, you take it and you move it to someplace else in the garden center, and all of a sudden, bingo, it just sells like that. It's not the weather.
yeah,
It's just they didn't see it there.
yeah. That's actually as a default to slow moving product that's in season. That's probably the very first thing you should do is move the location.
Mm-hmm. It's things like, so we used to have, for all of the chemicals that we sold, I had it's either 16 or 20 linear feet, 5 foot high, and it was all the stuff. And what I changed was I took, and I had the same fixtures like everybody else has got. I added risers to the top of them, another
Mm,
2 foot higher. And so right at about the 5'8" mark, I put a shelf all the way across and I put all my pump up sprayers.
yeah,
Bingo. You
yeah,
know, generally you would walk in and have to ask for a pump up sprayer. Um, but this gotcha. And then at the
yeah,
very back in the counter where nobody went, that's where I put all the parts. So if you wanted to repair your pump up sprayer, and things like this, you have pump up sprayers, whether it's poly or whether it's stainless, and you got an okay margin on it. But when you get to the back side of the rack and you have, here's the little kit that fixes. So here's a $40 pump up sprayer, all right, and the O-rings have worn, whatever it is. I don't take and pay $3 for that item and sell it for $6. No one else sells this stuff. I pay $3 and I sell it for $12. And well, it's $12. Yeah, but you don't have to go buy another $40 sprayer. I
yeah,
probably make more money on selling you the fix up parts than I did on selling the sprayer when it was new.
sure.
You go home happy, I go home happy.
Yeah, yeah, that makes great sense. Well, Tom, thank you very much again. That was that was a really um, well well done session, and
Well,
I'm
thank you.
sure the audience got a lot out of it. So
I had fun putting it together. I was excited about doing it. I mean, I woke up early this morning and go, oh gosh, this isn't till midday. It's like,
yeah, that's great. All right. Well, thank you, Tom.
all right, my friend. Thank you. Y'all
All
take
righty.
care. Invite me
Thanks.
again. I'll come back.
All right. We'll do that for sure.
All right. See you later.
Thank you.
See you. Bye.
Bye bye.